What's up, guys? It's February 6th, 2025. Today's gonna be a little bit of a quick one. It's kind of a busy day. Not gonna lie, streaming and trading tires me out a lot more than I thought. It is fun though. I do enjoy talking to you guys during the day. So here we have the daily. We have a 15 minute. We had a sideways day in the markets. We haven't had one of these days in a while. Guess it was bound to come. Now we got it out the way. That's good. We had range expansion. Now we have range contraction. Expansion, expansion, expansion. 2 days of contraction. Today was actually a pretty tight trading range. I'm gonna do this the quick way. Ain't no way today was. Oh no, that's the overnight session. Oh, this is a. So we're looking at this candle. I was like, how the heck was today a 17-point range? Oh, I guess this new low and high made within the last hour. That's a rare event. 38-point range, so definitely shrinking. Definitely shrinking. Yesterday we had, what the heck? Oh, 60. And then, so we have 30 some today. 60. I don't know if it's been super gloomy and rainy in San Francisco, so I don't know if it's the rain that's making me this tired or that, like, because I've been taking long naps after I trade. It's been very tired from trading and streaming and trading multiple products. It's fun, but oh, I think just waiting. If you guys were in the stream today, 3 or 4 trades came up to my limit order and then reversed. So I never got filled, and all those trades hit. And I just after that happened on the fourth time, I think it was Bitcoin. I missed Bitcoin, missed gold a crap ton of times, and I can't remember the other two. But man, I was just exhausted today. So, anyways, enough crying. Here we go. Daily chart. We have a bull channel, and now it's starting to consolidate. Consolidating at the previous swing high, which would be I'm calling this the swing high. I'm saying right. Oh, excuse me 1 second. I'm saying about this is the swing high. You know, this is also a swing high, but just I said the previous swing high. The previous swing high is actually here. Well, no, yeah. I mean, this is the range. Failed breakout. This bar sells off, testing the 50% level, and we rally for 3 legs, leg one, pull back leg two, pull back leg three, and the third leg it is the probabilities for continuation drastically go down, and that means sideways price action can go up. And sideways price action doesn't mean sell off, it just means sideways, which means we can still have rallies, we can still have sells. I don't know exactly what is going to happen. It's just sideways price action. We've all experienced it. Today was a tough day, so if you made it out green, be happy. I was talking to a friend at the end of the day, and I was kind of annoyed that I didn't necessarily make as much money as I wanted to, and he gave me a gentle reminder. You know how many traders probably got slaughtered today trading the S&P. So I hope if you guys are following the channel, it's helping and you didn't get slaughtered. But yeah, he put some perspective into what I've been doing, because I have been trying to push P&L every day, and it gets tiring after a while. So yeah, if you didn't get slaughtered, if you did get slaughtered today, don't even feel bad. These are the days that people quit. So if you got slaughtered and you're still trading, good. That's good. That's a very good sign. Not good you got slaughtered, but it's a good sign you got the resilience to stick it out. So we're going sideways. We have 3 bars up, 3 legs. I'm counting these 3 bars as 3 legs. Each one is a signal. 3 legs. Today is a very small bar right here. I keep thinking this is the day, but this is the day we're looking at. Follow through, breaking out above the EMA with follow through. Not the best follow through. We know we have a lot of legs here. We know that there was a pullback right here. We experienced that at the end of the day today. Sharp sell into the EMA and it rallied. This tail right here is this tail right here, and then it ended up actually being by the close, testing this breakout bar. Which, if you were to have a limit order set here, not the best place, because this is a trading range, so you want your limit order set on the lower half of this bar because it's a trading range, so you don't want to buy high. And I'm talking about we see the rally and we're looking for a pullback. So if you have a limit order set here, you don't want to sit there, because this bar is a trading range bar. So you want to sit at the lower half, and you would sit through some drawdown. If I was to get filled on this bar, my stop would probably be here. But price action stop says it should be here though, below the swing low. If you put it below the swing low, you're safe, and you catch a nice leg up, a quick leg up too. Maybe you scalp here, like one, pull back, like two. leg one, pull back, leg two, pull back, leg three. Couple of ways to play it. I'm not saying take that trade. I'm just talking about price action is fractal, so we could just talk about any chart really, and it'll be the same outcome. 5-minute chart with the gaps open or gaps on. Trading range price action, gaps closed. So right away we have a gap up, 2 bear bars. So gap up, bar one is bear bar, bad for the bulls, good for the bears, just showing that the market's trying to reverse. We have a big up, and now we're starting to go sideways. So this is not a big up. I'm just using that as terminology. Like we have an up and down direction, so that's more sideways price action. When we have a really big gap up, we usually can. There was a really big gap up the other day. Here, when we have a really big gap up, you can see a tradable leg within the first hour in that direction, and then we'll go sideways. Today was an all right size gap, and I'm eyeballing. I don't have any statistics. I'm just eyeballing it. And yeah, so where am I? And I'm glad it's the weekend. I'm gonna stream tomorrow, but I'm ready to sleep. I'm maybe in the middle of Saturday. I like waking up at the same time every day, so I'm not gonna sleep in. But gap up, pull back, leg one for the bears. Deep pullback. We're in trading range 3-4 for the bears. So this is a pullback for the bear leg one, pullback leg two, and this entire price here is a pullback for the gap up. We have a gap up, leg one, gap up, leg one, pullback leg two, pullback leg three. You could say leg four here. We rally for a couple hours. We get to the swing high, and then we get that sell off. Bears approach at the low here. You're thinking buy, but selling pressure starts to pick up. Bar 60, you got to recognize what is bar 60 doing. It's breaking out past many bars and it's producing a gap. So that is something you need to be aware of. You have to be aware of the gap being produced with bar 60. 60 is not a buy to me. However, look at 61. Bears that short 60 have very big gap risk open now. The risk is about 20 points. Well, excuse me, 20 points from 60. But let's say they short 44. They're gonna have to take profits sometimes, about almost 30 points. And we don't really know exactly where they're shorting, but we do know bears are shorting the range highs. They get waterfall profits. They're gonna want to take their profits. This is testing yesterday's range lows, kind of the breakout or kind of the high. I mean, you could say 48 is the high or the low of the range. Testing the bodies, and then it rallies. I do think 61 was a buy the close bar. I wasn't trading, but I definitely wanted to test the theory out maybe on sim, or I just thought it was a buy the close bar, and I watched it rally. I was like, wow, okay. So that makes sense because it's a vacuum, right? We're trading ranges, 50% of breakouts fail. 50%, that line doesn't even matter. I don't trade with that line, so I'm going to take it away. 50% of breakouts fail. So leg one, pull back. Push one, push two, push three, push four, push five. 5 pushes is breakout mode. It's a type of a triangle. So we can see we have a leg up and a triangle here. Triangle has a bearish breakout. Sells off. 50% of the time it reverses, and that's what we got. I did not expect to make a new high at the end of the day. I can't tell you the percentage of that, but I would think that the rally was going to stop around the middle of the day. However, bears were just consistently getting trapped. What produces gaps? Limit order traders, and that's why we look for gaps when we're trading, because then we know the breakout's stronger. Limit order bears have sell orders set here, expecting a leg one, pull back leg two, but they get trapped and they're forced to buy back shorts. You can see this huge. I just completely skipped all this. Let's just skip. Let's talk in order here. Sorry, guys. Okay, so we are here. Leg one, pull back leg two, pull back leg three. Bar 14, I think, was a news bar. I did have a sell order sitting here. Rallied and whoosh. Man, that was a pretty cool trade, because if you were watching the stream, there was a couple people like, "What are you doing? What are you doing?" And at one point, I was like, "What am I doing? This is a gap up with the trading range. I mean, excuse me, gap up with this was a really nice bull bar at one point." And my stop was right here, and I'm like, "Oh yeah, I'm gonna wear the dunce cap today." And then it reverses lower, leg one, pull back, leg two, pull back, leg three, wedge bottom. That's a nested wedge bottom, leg one, pull back, leg two, pull back, leg three. Definitely several wedges going on here. Trading range behavior. Bulls get the breakout from the leg one, pull back, leg two perspective. A, B, C, D. Pull back. Leg one, 16, 17, pull back 18, rally, 19, 20, 22, 20, 21, 22, bad follow through, 23, momentum slowing down, and then we get 4-bar bear micro channel with, at this point in time, there are gaps open. Showing 4 bars, showing to go one tick below 28, one tick below 26. We get that one tick below 26 by bar 30. I didn't get filled on this entry here. I was skeptical about getting short, so I want to see how it reacted. So then I put another short. I saw 30 and this sell off, and then I pulled it once I saw this target already get hit. It's very interesting just to see the way price action rolls when you start trading limit orders. I'm glad I trade limit orders now, because if I was trading market orders, I'd get crushed, but I walked away unscathed today trading multiple markets. So I feel like my trading is evolving. It's just kind of mentally beating me up. I don't know why. I don't know why I'm so tired from profitable. Usually I'd be energized, but I'm gonna sleep early today. Leg 1, pull back leg 2, pull back leg 3, 2-bar rally, 34, pull back, 34, pull back, 35. This is also a leg 1, pull back, leg 2. Here, fails to get the new high. Remember, there's two types of things that could happen. Bulls want to rally, pull back, new high, rally, pull back, same high, rally, pull back, lower high. Lower high is always the worst case. They get a lower high here. Same situation for the bears. Sell off, pull back, new low, sell off, pull back, same low, sell off, pull back, lower high. Lower high is the worst situation for the bears. And then you could say prolonged or delayed second leg, leg 1, pull back, leg 2, and bulls do get that new high by one tick, 43, 44-ish. Get to the bear breakout, leg 1, and then this is a bear channel. I don't know why. I saw so many legs, I just didn't want to count it. Leg 1, pull back, leg 2. Every opposite bar could be a type of a leg, so there's like about 5 legs. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, pull back, leg 5. That's actually not a lot of bear pressure, honestly. Before the 60, I would think that we're just gonna go a little bit more sideways to up. Anyway, 60, we talked about this price action a little bit, trapping bears here. 61, really big bear bar becoming climactic, testing the EMA, testing yesterday's range lows. Then we rally and then we get a bears buyback shorts. Bulls get the rally. Bulls buyback lows, bears buyback lows. Bulls buy range lows from yesterday. So this is a buy low sell high play for the bulls. It's a range bound price action. 50% of the time the market will reverse. Leg 1, pull back leg 2, pull back leg 3. In trading ranges, legs do not have to be symmetrical. Here's also 3 fractal legs, by the way. Leg 1, pull back, leg 2, pull back, leg 3. Very climactic, strong sell, 79. What time of the day is that? That's the last bar of the day. Wow. Just to stay kosher with everything, we're gonna do it. We're gonna put this here, do this. I'm gonna make it today's be a quick one though, I swear. What are we at? 13 minutes. Let me know how you guys did in the comments. Hope you guys are making money. Some of you messaged me in Discord and told me you made money today, which I'm very happy about, because today is a day traders get slaughtered. Okay, so I counted leg 1. I counted a leg 1, pull back leg 2, pull back leg 3. Deep pull back, leg 1, pull back leg 2. And then I also said leg 1, pull back leg 2, pull back leg 3. So the first set of legs, leg 1, pull back leg 2, pull back leg 3. I think we all see that. Visible pullbacks are easy to read. But then the harder pullbacks are the fractal pullbacks here and here. So leg 1, pull back. Hold on. Let me see that. Yeah, okay. Leg 1, pull back, small leg, very weak here, becoming climactic. We get a high and then a deep pullback, finally breaking the previous low here. It's no trend line break, so you could say this is one leg, trend line break, leg 2, second leg trap. Few ways to read it. I'm just counting, I saw this as a trend line break, so this right here would be the trend line break. Oh, excuse me. I saw this as a trend line break, so this is a trend line break to me. Leg 1, pull back, trend line break, leg 2, pull back, trend line break, leg 3. And even within this climactic leg 1, pull back, leg 2, pull back, leg 3, climax. Leg 1, pull back, leg 2, 381 is this bar right here, climactic, and then we get a rally. Again, pulling back, or talking about this situation. This is the third situation. Bulls can make a lower high. This is a double top on top of the trading range. Market dumps, bulls sell out of longs, bears that are trapped are gonna sell higher, and boom, all the way back. Make bears that shorter than one tick below, shorter one tick here, short here, and then make money because they're gonna short here, here, all the way down, creating a gap. All right, guys, I am exhausted today. I hope you guys don't destroy me. Let's go over measured moves real quick. I know I try to make these a little more detailed, but I'm not gonna sit here and cry. So I'm gonna draw these three 1-to-1s. Wait a minute. That was sloppy. Let's go body to body. About 1-to-1-ish. Gap up ends there. Starts at the pullback. That's met over here. Okay. Wait, the pullback starts here too. So you guys see that measure moves are subjective. Okay, they're just meant to keep us in line with the previous trend. You don't actually have to like measured moves are not absolute. And then you can get about 2R if you shorted 60. You short remark order 60, you get a little more than 2R, 2.5R. In trading ranges, gaps get closed, so we can see that happening here. Gaps are closing. Sell off, rally closes the gap. Sell off closes these gaps. This sell off closes the gap up. This rally closes those gaps. And that shows that traders are able to scale in and make money. The gaps can either stay open or stay closed. And if they're open, we're in a trending market. If they stay closed, it's a trading range market. So keep that in mind. Here's a measured move from the breakout, and it was met. All right, guys, about 16 minutes, a little bit shorter today. Hope you guys have a good day. Looking forward to talking to you guys tomorrow. Tomorrow's probably going to be a little bit of a shorter stream as well. And yeah, I will talk to you guys then. Have a good one, everyone. Thank you for tuning in. If you learned something, share the show. I'll talk to you in Discord. Have a good one. Bye.